Hello, patrons. Welcome to another episode of James and Loki's Gems of the Week. Let's bring my co host Loki into the shot. Check him out. He is up and alert and ready to go. He may bark some during this video. He's been barking a little bit recently. You ready to go, Loki? Yes? Okay, so let's go. Without further ado, I will share my desktop. And these are the last two tweets that we covered in last week's episode of James and Loki's Gems of the Week. So let's just scroll right up from here and go to the next tweet that I liked from Gail Alfar, taking a long road trip in your beautiful Tesla. Have a great weekend and happy travels. So that's a good tweet. Next, a tweet from Elon Musk. Given that modern AI can solve any prove you're not a robot tests, it's now trivial to spin up 100,000 human-like bots for less than a penny per account. Paid verification increases bot count by 10,000. Bot cost, not count, by 10,000% and makes it much easier to identify bots by phone and credit card clustering. Obvious conclusion. Paid account social media will be the only social media that matters. So a good tweet there from Elon on the rationale behind verified accounts and the new bot policy. Let's see. Next, a tweet from Forward Cap that I liked. Auto OEMs are purposefully limiting supply to protect the residual value of their fleets, given the massive implications on their finance divisions. Earlier this year, Kia CEO admitted to controlling supply, which artificially boosts residual values. I talked about this in my interview with Herbert Ong that I did almost a week ago that he released after editing it together yesterday. So go check out that video if you haven't seen it already for more info on that topic. Elon also tweeted still a few legacy neural nets using single cam, single frame that need to move to surround video, answering a question from Whole Mars Catalog. One more round of refinement needed until what? So that's what the until what was. Next, a tweet from Tom at TeslaQQ. You claim Tesla uses too much water. Below is the reality. In the very same region, LEAG has, by the way, not only used these 100 million cubic meters, but illegally used 140 million more over the course of several years. Now think again, who should limit their water usage? Look at this bar chart. Here's how many million liters of water Tesla consumed. Make sure I've got this right. Cubic meters. Sorry, not liters. 100 million cubic meters. Got to get my metric scale right because we're talking about Tesla's Berlin Gigafactory here. And then here are some other users of water in the region. Here's the LEAG they were talking about. This is a coal mine, folks, a coal mine in Germany using over 100 million cubic meters of water, or, 70 times as much as Tesla is using, right? And they're violating their water permit. They're using 140 million in excess of the amount they're allowed to use, is what Tom said. So what's this in reply to? This video from DW News of environmentalists complaining about Elon Musk's Tesla factory in Germany, where they just said they can expand and do another whole factory on that same site without using any more water than they're already approved to use. But people still aren't happy about that. So I like this reply. I thought that was a really good tweet. Another tweet from Forward Cap that I liked. Purposefully limiting supply and losing market share shows how weak their position is. A better approach to sustaining margins is to 1. Reduce production costs, 2. Improve the product to maintain prices at similar volumes, but they're seemingly incapable. Yeah, make the product better. That's going to solve all your problems. Just do that. The next tweet that I liked came from Elon Alerts, at Elon_alerts on Twitter. This is the account you can follow if you want to be notified anytime Elon tweets or replies or likes a tweet. And he liked a tweet from me. This was my Tesla versus Ford versus GM set of charts. So I've reviewed these already in a few videos that I bet you've seen if you're a Patreon supporter of mine. So I will back out of here and just keep going. But you gotta like that tweet, right? When Elon likes some of your charts. Next, a tweet from Sawyer Merritt. News, according to new data from ReRev, the Tesla Cybertruck is the most anticipated EV of 2023, and it's not close. The Cybertruck generated more than twice the number of Google searches than the other 9 vehicles on the top 10 list combined. So yeah, people were second most interested in the Mercedes-Benz EQS, but only about 1/9 as many people searched Google for that as searched for Tesla Cybertruck. Next, a tweet from Car Dealership Guy, at Guy Dealership on Twitter. New vehicle inventory is up 70% since last year, but still down nearly 50% since 2019. So the 2023 line is here. That's elevated versus the 2022 level in the prior year that climbed to that level. But in prior years, 2019, 2020, supply was a lot higher pre-COVID. Next, a tweet from Gregor Truck, Cybertruck cruising by. So if you haven't seen that video clip before, it's pretty short, but just another shot of Cybertruck out in the real world. Here's a this is pure joy tweet from Elon Musk that I liked. Mr. Musk did not respond to a request for comment, and an email to Twitter's communication department was returned with a poop emoji. So this is, of course, by design. Elon set up an account called communications@twitter.com or whatever. He created an email address for official Twitter communications, and then wrote like the simplest script in the whole world. Every time it receives any email, it just replies with a single poop emoji. That's all it does. Nobody monitors the emails that go in. So yeah, the New York Times actually printed that at the end of their article. That's so funny, and that's why Elon said it was pure joy to see his plan work out even better than he had hoped. The New York Times putting that in print. So funny. Elon tweeted, Cybertruck will change the look of the roads. Finally feels like the future. 20,000 likes on that tweet from Elon as the reply to that video. So that's pretty good for a reply to an account called Gregor Truck. Another tweet from Guy Dealership. Tesla gained the most market share in Q1, up 1.4 percentage points. That's not 1.4% growth. That's taking 1.4 more percentage points of the total car market, the total new vehicle market. Tesla increased their market share by 1.4 percentage points. So let's see if we can find, yeah, here's the table. So that's almost lined up right on the screen. There, that's a little bit better. Okay, so Cox Automotive says General Motors still has the #1 market share of the U.S. market. As of Q1 2023, they're estimating Q1 sales at 587,020. These numbers were released before the end of the quarter, so you know they're not actuals. Ford next, and Toyota right behind them. And those are the only ones that are really close to 500,000 per quarter. Then Tesla in Q1 of 2022 had sold 129,000 vehicles. In Q4 of 2022, 131. They're estimating 181 almost in Q1 of 2023, which would be 5.1% of the market, up from a prior year 3.8% by 1.4 percentage points. And you can see how small the changes were for everybody else except Toyota. Toyota is getting crushed. They're down a lot from where they were in the prior year. And Tesla is up more like, 40% year over year, 37% sequentially. So big numbers in that Cox Automotive estimate. Take it for what it's worth. It's an estimate, but really eye-opening to see how much market share Tesla is taking in their estimation. Next, a tweet from Mayor Tacker. Analysts are expecting Tesla deliveries plus 35% year over year, probably accurate, yet minus 10% EPS year over year. This is setting up to be the biggest EPS percent beat in a long time unless they revise up furiously over the next 3 weeks. I suspect that is what will happen. So yeah, not long to wait now. Tesla earnings will be announced on April 19th. So 420 should be an interesting trading day this year, depending on what Tesla releases. Forward Cap with another great tweet. Even if they looked the same, they don't. The point remains. Tesla is 6+ years ahead. What are we talking about here? Oh, this is probably too long a thread for me to go through all of. Tesla Doc invited in Albert Bridge, Cap, who is Drew Dixon, to opine on this. And Drew said, of course, they will have to release more models to get to 20 million or even 10 million. Musk flippantly said, I don't know, 10 maybe during the last investor day, but there is this blind assumption within Tesla that every model will be a hit. That ain't the way any of this works, Drew says. So I asked, which competitor would you say is offering the most superior EV ownership experience, Drew? If the competition is coming, where are they? Point out the superior competition. I would like to know who's doing a better job creating compelling electric vehicles than Tesla is, so that it supports your claim that the competition is coming to take Tesla's market share. And Drew says, across the product range, none of them yet, James, yet. Although I haven't done much due diligence on the Chinese, BYD, and everybody. But now that the incumbents are finally focused on EV, I mean, do you not expect things to get more competitive? I haven't seen anybody else produce a better electric vehicle than Tesla has on offer for the market. Once I do, I'll start getting concerned about the competitive environment. But so long as Tesla is making the best value proposition vehicles, I'm not worried. You've seen Ford's EV margins, right? Minus 40% looks closer to bankrupt than it is to competitive. Strangely, they look just like Tesla did when they started ramping up, Drew says, and I caught him in his lie. Fact check, wrong. Directionally, you're wrong directionally. Based on Forward Cap's info, we reviewed this last week, so I'm not going to talk it again. And I reviewed it with Herbert during my interview, so you may have seen it twice already. Even if they look the same, they don't. The point remains, Tesla is 6+ years ahead, Forward Cap said. Next, a tweet from Andrea S. James saying thank you to Stephen Mark Ryan for calling her the actual smartest Tesla stock analyst of all time. And I replied with a little joke here. Elon Musk agrees. When I tweeted, hey, Elon Musk, who's your favorite retail Tesla analyst? Elon said James, and I added on here, Andrea S. James. For clarification, that's the James that Elon meant. When in actuality, it was neither of us. It was his son, Saxon James Musk, answering the question, who is, what's Saxon's middle name? What's the SJM? What's the J stand for? But then Elon did reply to me, "You're pretty great." So that's one of the mugs that I have on the shelf behind me back here. Next, a tweet from Bill Chen that I liked. This 50% CAGR guidance is a long-term figure indexed from 2020 with actual numbers in parentheses. So he's replying to Klaus Miller, a longtime Tesla hater, a longtime Tesla short seller, I think. Lemmings still claim 50% CAGR on less than 20% growth in deliveries year over year, and price cuts generating 20% lower unit price. Well, that's not true. We're about to see that in less than 3 weeks. It requires a solid case of cognitive dissonance. Stay being bullish on this company with their aging products and their erratic, druggy CEO. This is the same argument we hear from Brad Munkin on the Tesla Q side, that Tesla's lineup is aging. All right, list out for me, please, the top 10 selling vehicles globally. Honda Accord, Honda Civic, Toyota Camry, Toyota Corolla, Ford F-150, Volkswagen Beetle. Are any of those new vehicles? No, they've all been around for decades. You know, some of those for more than 50 years, right? So it's preposterous when Brad Munkin says Tesla's doomed because their lineup is aging. Well, Tesla is updating their models all the time. There is no new model year like Honda pretends when they say it's the all-new Honda Accord. It's not all new. I don't know who believes the Accord is all new. In whatever year they say they've made a bunch of changes to it. As far as the buying consumer populace is concerned, it's still the same model it's been for decades, right? So, yeah, there's the CAGR numbers. And Klaus thinks Tesla missed their growth target, except they didn't miss their growth target. If you just look, Tesla beat where 50% would have gotten them if they hadn't overachieved in 2021 by so much, right? That's what the point of this illustration is. So 50% from 500,000 is 750,000. From there, 50% growth would have gotten you to 1.1. From there, 50% growth would have gotten you to almost 1.7. Tesla is already producing at a run rate greater than this in a quarter when they were shut down for holidays in China and for line upgrades for Project Highland, etc. So they're going to blow this number away, and then in 2024, probably going to blow away this 2.5 number as well. Okay, so 50% growth every year if you don't recalibrate to the actual number that Tesla achieved in 2021 that was so much more than 50% is the point of doing it that way. Next, a tweet from Steven Spencer that I liked. I was told Giga Berlin would need to idle or slow its ramp because of oversupply. So I tweeted, Tesla Q told me the competition was coming to take Tesla's European market share, not to watch Tesla defend its 20% share of the European market while they divide the remaining 80% into more and smaller slices. So here's this chart from a few days before the quarter ended of market share by brand. So Tesla is in the dark blue here. So you see in 2019 the deliveries were especially high relative to the rest of the EV market because Tesla was delivering the Model 3 backlog to everybody who had placed orders over the previous 4 years. In Europe, they only just homologated the Model 3 at the start of 2019 Q1 to be allowed to sell it in Europe for the remainder of that year. So apart from that one little outlier year, Tesla has had about 20% market share and still does today. So the competition is not coming for Tesla's market share. They're coming for each other's market share. All of these other blocks are getting smaller than they used to be. Tesla's is still about the same size it's been since the beginning. So I'll back out of there. Here's another one from Elon Alerts. We've finally been verified. Thank you, Elon Musk and Twitter, for granting some social recognition to us. humble members of the bot species. So, good tweet there from the Elon Alerts bot account. Elon tweeted, Tesla car temp is automatically kept within a safe range even when the car appears off in order to protect infants and pets. That said, it would be more convenient to keep the car on for entertainment and comfort if the camera detects occupants. We will make that change. So Tesla's going to rewrite the software in the next version of their software so that if it detects that people are still in the car, it'll leave the climate control on even if the driver gets out and walks away. And I replied here, Tesla actually solved this problem 6.5 years ago. Incredible that most new 2023 models still don't have this life-saving safety feature. In many cases, they can't do it because they might run your car out of gas if the gasoline engine needs to stay running in order to run the climate control system. Right, that would be expensive pretty quick, and it might put you in a bad situation if you were a long way from a gas station and it ran you down to a dangerously low level before it cut off or whatever. Next, a tweet from Stephen Mark Ryan. Your charts are the best. Aw, thanks, Stephen Mark Ryan. So that's replying to me saying, thanks for featuring my latest Tesla versus Ford and GM charts in your video, Stephen Mark Ryan. So, good to keep a positive Tesla community going on YouTube and on Twitter. Here's a tweet from Loki's Spot. Yes, James is the best. Now, what's this Loki's Spot account about? Folks, I did not create this account. So somebody got clever and created a Twitter handle, Loki Spot, or Loki's Pot. Steer clear of that one. It's not me. I'm not running this account, so I can't vouch for them if they start posting questionable things. It's not me doing it. But yeah, Florida, USA. They've got 2 followers, so you could be one of the 2 people who follows this account. Who's following them? Tesla and Lisa895. So this could be the person running the account. Crest test. I don't know. We'll see. But I'll back out of there and go back to the next tweet that I liked. From Guy Dealership again, tweeting, but not surprising, only silver lining is the default rate has not moved at the same pace as delinquencies, at least not yet. What's he replying to? In case you're wondering how auto loans are performing, auto loans 60-plus days delinquent have reached a record high of 1.9% relative to loan base. Clearly a concerning trend. So what do we have on this chart? The yellow line, or orange, is severe account delinquency. 60-plus days people are behind on making their car payments. And the account default rate is actually the repo rate, people who are losing their car because they have defaulted on their payments. They didn't make enough payments that the bank repossessed their vehicle. So if you look at this trend back to January of 2006, here's January of 2003, the blue line isn't in problem territory yet. It's still about where it normally is. But this severe account delinquency rate, this is an ominous portent. This may get bad if this rate keeps rising past 2%, right? Don't want that. So I replied here with the grimacing face emoji and the this is fine gif. Yeah, rising interest rates, not great for people making car payments. If it's a variable rate loan they took out, especially. Quick reminder from my Tesla Weekend at 4K Podcast. This is Brian. Tesla makes more profit per vehicle sold than the entire retail cost of the number 2 car on this list, the Wuling Mini. Retweeting Berlinergy here. Per year-to-date March 2023, the Tesla Model Y is the number 1 selling vehicle of all vehicles in China. Model 3 came in 10th. Translated ranking based on insured units through March 26th here under. Model Y, the number one selling vehicle, 83,744 units through March 26th, with the Wuling Hongguang Mini at 66,056. Brian just pointing out, for every one of these units that Tesla sold, they could have purchased a Hongguang Mini with part of the profit they made selling the Model Y. So that's just to give you a little bit of perspective there. I thought that was an eyebrow-raising tweet to like. Here's one from friend of the show and executive producer of this program, Kathy Kitchler. So proud of you, D, for getting Elon to increase Tesla's already best-in-the-world safety. And will you be commemorating this accomplishment with the traditional mug, James S. style, replying to Tesla Diva, who tweeted, man, I should have changed the settings for that Elon Musk reply post to only people I follow this morning. Whoa, people are ignorant and mean. Oh well, we are getting a new safety feature. Yeah, she took some abuse in the comments from trolls. Being mean. That's disappointing. But good to get a little uplifting comment here from Kathy. And always good to get, let me go back to there. Always good to get a mug or two or three commemorating a time that Elon Musk said a nice thing. So I will go right back to sharing my desktop. Loki doesn't know what's going on. Let me switch over to the Loki's bed cam. Oh, what a tired dog. What's going on, Loki? You okay, buddy? He's okay, just licking his lips. All right, back to the parade of likes. Up I go to the next one from James Cat at Tesla Fan MTL. Best-selling car year-to-date in all of China, despite multiple times more expensive and profitable than cars below it on the list. No big deal. Yeah, Tesla just taking care of business, taking care of the number one spot on the sales list. And Elon Alerts tweeted Elon is now the most followed person on Twitter with 133 million plus followers. Congrats and thank you so much for getting us excited about the future, Elon. So good tweet there. Here's a tweet from Jimma at James Dalma. We averaged 300 per hour on LA freeways recently. Just happened to measure this yesterday. What's he replying to? It's my poll where I asked people, well, where I shared, I counted more Teslas in traffic today than I've ever seen before in a single hour of driving, and then asked people, in what year did you spot the most Teslas per hour you've ever seen? These are the results I was hoping to get. 75% of respondents said 2023, not even 3 months old at the time of this poll, is the year that they've seen more Teslas per hour than any other day in their life. Tesla continuing to deliver more and more Teslas all over the world. So small numbers here. A pretty big number for C results, 9.3%. So, you know, factor this amount up by another 9 points probably. So 84% if you threw out those results. All right. The next tweet from My Tesla Weekend at 4K Podcast. Jim status confirmed. Yes, Brian. You made not one but 2 gems this week so far and counting. We'll see if you get more. What do we have here? This thread began with, I'm an outlier, but I'll explain it all on the Friday live stream. Follow me for that if you want to see how the stew is cooked. But I'm at 444,489 for Tesla Q1 production. That's a pretty good forecast. Tesla did report just over 440,000. The analysts throw darts and refuse to show their math. You can see mine and make your own determination. But his model had them at 443, so a little bit closer, close enough. Tim, Oracle Tim says 444,444 is all of his is his lucky number 6 times in a row. And Brian replied, "You remember when I was on your show last week, I threw in some 420s and 469s, but this is my actual number. If we're having fun, it's still 444, 420, or 444, 469. But if we're getting silly accurate, these are my real numbers. Anything around there would be a good success." And I replied, "Anything higher than 420 is great," with the gif of great success. And Brian replied, "Wait, did you also reply to this with the great success gif? And did you also pronounce it gif as is the only way to say it? I hope I'm saying it the same way you say it, Brian." And I replied, "No, I didn't also reply with the great success gif. You also replied with the great success gif. Check the timestamps." So if I click here, you can see that mine was earlier in the day than the one that Brian replied with. So, fact check true. Brian checked me out, and that was correct. He said I should make a new short series with Brian's Gyms of the Week where I just refer to people to your Twitter. And I said, "I like the way you think." So there's the gym status confirmed. All right. That was fun. Back we go to Holmar's catalog tweet that I liked. So this ended up basically being a total fraud. The $40,000 quote-unquote EV truck for the everyman is now $60,000 with negative 40% margins. Ford knew they could never sell this truck at $40,000. They just lied for positive reviews. Yeah, they just wanted to get somebody to write this article that said 2022 Ford F-150 Lightning, the everyman's EV, starting under $40,000. Yeah, well, no. They are not going to sell this for under $40,000. Here's a tweet from Steven Spencer, another one. "This entire exchange is the difference between a highly granular bottom-up analysis versus a high-level top-down estimate. I have a lot more confidence in James's methodology and conclusions." So I sent him a nice gif here with Jason Momoa making heart hands and a pretty face. So I already reviewed these tweets in a video that is available to you and public on YouTube now. So go check that one out if you want to know what that whole thread was about. Here's a tweet from Alex at Alex_A_Voigt on Twitter. "Many are confused about who belongs to whom in the auto industry. Therefore, here is an overview." So just a bunch of infographics here that show you all the brands that are owned by the different companies, the different automakers. So here's one for the Renault, Nissan, Mitsubishi group. Here's one for Stellantis. So yeah, Ram, Dodge, Jeep, Chrysler, and a bunch of other ones tier up to Stellantis. A very regional branding situation going on with Stellantis. We have Geely here. They own Volvo and Lotus and some other stuff. Then Hyundai has the Kia and Genesis lines. Tata Motors has Jaguar, Land Rover mostly, and then some Tata branded vehicles. BMW owns Mini and Rolls-Royce. General Motors owns Cadillac, Chevy, GMC, and Buick. Herbert pointed out that they own Mercury. Ford. Ford used to own Mercury. GM used to own Pontiac and Oldsmobile before those got retired, and Saturn. GM had a bunch of car brands, and they no longer sell very many cars. They're mostly a truck and SUV company now. Toyota, Lexus. So just some really good infographics there if you're interested in seeing which companies own which auto brands. Mior Tucker here. "Tesla generates significantly better returns on invested capital than even Ferrari." Hashtag race, that's their ticker symbol. "Despite selling at 1/5 the average price. High and sturdy, ROIC is how we identify moats, brand or cost and scale. Tesla's brand is great, but they're absolutely savage on cost control. So you probably can't see that chart very well, but go look it up on Twitter and zoom in on that chart and learn about ROIC, Mayor's favorite metric. So, pardon me for just a second. I need to attend to text quickly. And we'll get right back to the likes. What's the next thing that I liked? From Holmar's catalog, another tweet. Huge thanks to Chevron for sponsoring Holmar's this week. Chevron is a leader in clean energy and artificial intelligence. Clean energy is nice, but until that happens, we need fossil fuels. Chevron keeps the world running. With a nice Chevron human energy. Now, why would I like this tweet? Because it was April Fool's Day. Here's your April 1st clue. So a really funny tweet from Holmars on April Fool's Day. Tesla sent out this Cybertruck crash test video clip, but I also covered that in a video recently, so go check that one out. It's on my Patreon page, and I'll make it public later on this week, but you've got access to it already, patrons. Here's one from Herbert Ong. Time is running out for GM, Ford, Lucid, Rivian, and others. In this interview, James Stevenson compares how each of 24 car manufacturers are doing. So this one I made allusions to a few times earlier in this video. Go check out this interview if you haven't already. It's over an hour of me talking with Herbert about Tesla's competitive position, sharing lots of tweets from me and others and charts that I and others made. So go check that out if you're interested. Here's a tweet from Xander Sky at R6Alex, who said, already enjoying. So there they are, looking at my operating cash flows by automaker chart while recharging at a Flying J truck stop, I guess. Here is a tweet from Radislav Modelinsky. Let's click through here and see what was on target. A thread begun by Eric Zhu captioned, Elon Musk's tweet drafts just leaked. So here's what Elon Musk's tweet drafts look like. Laughing emoji, concerning, looking into it. Laughing emoji, exclamation point, concerning, exclamation point, looking into it. So there's a reply here from Shibatoshi Nakamoto, exclamation point, with a reply from Elon Musk, exclamation point, with a reply from me, this is messed up, one of Elon's favorite things to tweet, followed by this target, this bullseye right on target emoji, direct hit, which is another one of Elon's favorite things to tweet that would have been in his drafts if you were to look at, Elon's actual draft history. Here's one from Sikonik, SICONIK1 on Twitter. The saddest thing is that we go through this every single time. I mean, pattern recognition is one of the hallmarks of intelligence, right? We got people like Fly out there lot truthing like it's 2018, and the Q is fighting as to who will be played by Brad Pitt in the movie. It's so funny. That was the thing in 2018. They were all convinced that they were going to be The Big Short. The next Big Short movie was going to be about Tesla Q and how brilliant they were to gamble all their money on Tesla stock value crashing. They literally had conversations back and forth about what that movie was going to be like. So what's he replying to here? Oh, it's me saying, Tesla haters, when every new quarter begins, Tesla demand is dead in Europe, Tesla Q, and they've got 19 days worth of data and Tesla's in 4th place or whatever. So here's the key at the top of the chart. And then what happens next? The quarter ends, and they're not talking about that at all. Why not? Because Tesla leaps out of 4th place about halfway through the quarter into 1st place, and then over the last month of the quarter, it just runs away. I mean, I talk a lot about Tesla ending the wave. Tesla did not end the wave in Europe in Q1. Most of these deliveries happened in the last month of the quarter. So I'll back out of here and keep going. Here's one from Matthias Fons. Tesla sold more cars last month in Denmark than it did in all of 2022. The Tesla Model Y became the best-selling Danish vehicle in a month of all time. Model Y, 3,203 vehicles registered in March. Ford Kuga in July of 2020 was 1,688. And the VW Up, never heard of that one, back in November 2012 was 1,642. So, yeah, that's a record that may stand for all time. Model Y registrations in Denmark in March of 2023. Model Y was 1/5 of last month's car sales. 1 out of every 5 cars sold in Denmark in March was a Model Y. That's pretty great. I mean, that's cherry picking for sure, but it's not a bad sign. It's a good sign when you're breaking sales records, right? Even if they are sales records for one country in Europe. All right, next next tweet that I liked came from Elon Musk. Tell me this isn't the best $8 you've ever spent. Replying to Washington Post fact checker Glenn Kessler WP trapped in community notes hell. Every time he sends a tweet, community notes comes back in and corrects it. So here the community notes comes back and hits him again for objecting to his community note, and fact checks him on his correction of community notes. So that's pretty funny. Next, a tweet from Big Tesla at Hiking Skiing, who may be awaiting Tesla Q1 23 production and delivery numbers. Well, we know Rob Maurer. I'm not going to read through all these because there's such a long list of them. But I was honored to be included on the list here with a cup of coffee. Why not with a dog? Because Earl of Frunkpuppy gets the dog emoji. I'm okay with that. But yeah, look at all these numbers. And an emoji catered to everyone on the list. So I thought that was pretty great. And I liked that tweet because a lot of time, effort, thought went into that tweet. Next, a tweet from Dutchie at Dutchie Wiegans. This is from this morning. Please like James's tweet. Facts unable to catch. Richly deserves to be ratioed. What's this about? Let me click through here so you can see. Facts Chaser on April 1st, on April Fool's Day, tweeted, more proof that Musk's political tweets and or expensive Tesla repair bills / appalling customer service are compelling some Tesla owners to ditch the brand. And what's his proof for this anecdote? Well, he's got a screenshot here of Austin saying, as y'all know, I've been a huge fan of Tesla for years now. However, I just can't stand Elon Musk anymore. So I'm very excited to announce that I just took delivery of this beautiful all-electric Porsche Taycan. So I had to reply, it's only more proof that April Fool's Day still identifies gullible people in desperate search of anecdotes to support their bare thesis. So here's Austin's follow-up to his April Fool's Day joke. Happy April Fools, you fools. As a couple people pointed out, my bio and or the date should have been a dead giveaway, but they were not a dead giveaway for Facts Chaser. So I got a lot of bahahas in here. April 1st, the only day of the year people critically evaluate things on the internet before accepting them as true. The most serious of gotchas, LMAO, got him. And I always look for this one. This one always gets the most likes somehow. So I feel like I've done something good when I see this one in the replies. All right, so that was that one. Here's one from Recent Sneakers, extended metaphor warning. Get brighter with Herbert Ong by watching James cast light on Tesla's competition before the fall into the shadows of the Valley of Death. So a little clip here from our interview that Recent Sneakers put out. Here's another one from Dutchie. You won't, not when counting units, as production ramps quickly, so will inventory, which is simply a derivative of the production rate. What you want to see flatten is the ratio of inventory to production. So this is helping somebody else understand what ending the wave means. It means there's going to be more ending inventory as time goes by and as Tesla's deliveries increase. I just made a playlist this morning of 4 videos where I talk about ending the wave and why that makes sense. Here's a tweet I liked from Herbert Ong. Amazingly accurate. Well done, James. This is today's production and delivery numbers released by Tesla. They were pretty close to what my forecast was. Production, Tesla beat my February 19th forecast by 0.16% or 725 vehicles. And for deliveries, Tesla beat by 0.85% or 3,574 vehicles. I said I'm satisfied with that. When the first rule of forecasting is whatever you forecast, it will be wrong. You just hope that it's not wrong by a lot, and in this case, both of these were within 1%. That one was real close. You got to be lucky to get that close. And that's exactly what I replied with when Herbert called me out for recognition. I said, thank you. You have to be lucky to get close. I have been very fortunate to get close a few times. And somebody asked me, where is it? It wasn't in this thread. It was in this thread, I think. Oh, well, here's troll fun with numbers. So what you're saying is you lowballed the number in February, so you had no chance of saying they missed. On a sub 420K delivery expectation, that should be a $150 stock. So I had to reply, yes, fun with numbers. I intentionally lowballed my production and deliveries forecasts by less than 1% of the actuals Tesla reported. Here's your sign. What a funny guy. Oh yeah, here it is. Off by 0.16% on production. Is this a new record for the accuracy of your estimates? I had to reply and say no. In Q3 of last year, my production forecast was within 31 units. I'm never going to beat that. That is too close for me to ever beat. Okay, so I'll get out of here and scroll on up. And this is the last tweet this week for James and Loki's Gems of the Week. From Mario Rustini, congratulations for your super accurate predictions. And I had to say thanks to Mario. And that's it. You are all caught up, and so is Loki, even though you can't see him. He is in here. There he is. He's sleeping. So we'll leave him be. We'll let sleeping dogs lie. And I'll outro and say, if you've enjoyed today's video, click the like button. If you're not subscribed to my channel already, what the heck is going on? You're a Patreon supporter. You should have subscribed by now. Thank you to everyone who supports me. All of you support me, especially my executive producers, Kathy Kitchler and Halter Ferguson Financial, who I thank at the end of every video for being executive producer level supporters. And I'll see you in the next one.